Hey everyone, Anthony here. Welcome back to another video. Now I am going to hop over to this article right here, investing during a fourth turning, and I included a lot of charts in this. So I just wanted to send this video out to the paid subscribers so that way you get a good idea of what is going on in terms of like the actual charts. I think everybody kind of struggles reading through some of these and trying to get a grasp of what is actually happening, and hopefully these videos help you grasp the charts a little bit better so that way we can start to action some of these trades. If you're this type of subscriber who has yet to actually take action, reading through the investing during a fourth turning article, you're just understanding why it's so important to just start actioning these trades, and the sooner you get a grasp of this, the better. So I'm going to help you do that. If you go over to your email, you can walk through this with me. It's going to be this article linked right here. But one thing I do want to point out is, especially for the subscribers who have yet to actually start to take action on some of these trades, I created a free webinar with you specifically in mind. This is going to be the Cash Collector Wealth Protector webinar. It's going to be a free online event that I'm going to host. It's going to walk you through probably about an hour and a half presentation on how we could start to action some of the things that we do and how to actually set up like your own portfolio. So that way you have like a guided a guide through actually starting to take action using Metals and Momentum, because I know a few of you you read it and then there's just no like follow through, but like the whole point is to understand how we could actually start to improve our lives by doing some investing and staying relatively safe while doing that. So I want to help you actually start to take action, and that is what the Cash Collector Wealth Protector is going to be all about. In the article you probably read the structuring a portfolio. That's going to be like the key kind of discussion, and also how to essentially take some of the money that's in your savings account and transfer it over to an asset like SGov that's going to actually pay you a dividend, and you're actually going to that capital is going to remain fairly safe, as safe as it possibly can be, but also start to generate you some income off of that savings. If that's the only step that you take after attending the webinar, then that's fantastic. Really, we just got to take one step at a time, and let's do that together. I'm going to help you through the free webinar. I don't have a date yet, but I'm going through the presentation this week, and then we'll choose a date, and I'll send that out in an announcement here. So let's go through some of the charts. And I'm glad everybody enjoyed this article. It has actually become the most viewed article that I've ever written on Substack. And basically, the whole thing with this investment thought is this HEFT ETF. So if you haven't read what this is all about, go back and read the article. It's really, really good, and I think a lot of my subscribers are going to like this. So what we can see in the short term is this is actually a bull flag. So what you can see here is we have a move upward and then a sideways kind of trading action, and this looks like it's actually about to break out right about here, or it could have one more pullback and then break out here. Basically, this bull flag would remain intact until we if we get this low, it'll be somewhere around $25, where you're going to be like, okay, well, we're not ready to actually break out yet, and we could be heading lower from there. But as of right now, and what's probably likely going to happen, is we have about 10% upside, and we're essentially just measuring the length of this flagpole, if you can call this a flagpole right here. You're measuring this length and then moving it up to create your next price target. So the price target that I have on the HEFT ETF, once we break out and confirm, then we're probably going to 30.19. That is a 10% upside from where we are right now. We have to wait for that breakout though. So this is just short term, but over the long term, I think the HEFT ETF is something that we could start to position ourselves in. And I was thinking maybe not right this second for me, but you guys might think like, okay, this is actually sounds like something that's very interesting for me, and it's easy, right? Like that's the thing, like This is an active managed fund that is going to manage a portion of our wealth for us. And I said to myself, I think 10 to 15, maybe even 20% for some of you might actually make a lot of sense. And I could understand why somebody who just wants to, set it and forget it, maybe you put like 20% of your investable money in something like the HEFT ETF. Not investment advice or anything like that, but I think for my paid subscribers, like for example, someone who is in maybe my family reading this, I think this makes a lot of sense for you if you're that type of person. For me, I think I'm going to wait right now because our portfolio, how it's set up right now, is a lot like how HEFT actually has their portfolio set up, and you do pay a management fee. It's 0.70%. So it's not nothing, but it's not like huge either. For me, I think I'm just at a point right now where if I'll get to the point where, I have a little bit of cash. That's just like too much cash to be sitting in cash. And I'm going to be looking for other opportunities. And once I get to that point, okay, then we can start to stick 10% in the HEFT ETF and actually go at it like that. I want to see their holdings actually adjust. So if you go to the website, it's actually linked in the article. Let's see what the HEFT ETF actually does. You'll see it linked right here. It's going to take you to this website, and what you'll be able to see is what this portfolio of stocks actually carries, and like what's the heaviest position. And currently right now, which is not great, but like it totally makes sense for the time, it has 23% of the holdings in cash and cash equivalents. So what that means is probably like government bonds, but then it also holds other government bonds in the portfolio already. So it's pretty heavily skewed to government bonds, which makes sense for the time, but like once we get into a situation where we're going to be a little bit more aggressive in our portfolio, I want to make sure that actually updates. And I think that's probably what's going to happen because this is an active managed fund, but we want to make sure they're doing the things that we would actually want it to do. So that's super important, and we'll save that for another time here. But I think for a lot of Substack subscribers, like I'm thinking about like someone like my mom or my dad or something like that, then I think that makes a lot of sense for them to just go ahead, jump right in and not worry about it. And that's what I would probably tell my mom or my dad if they were asking me. So let's go on to the silver chart. The silver chart, it should be interesting to watch on Monday because with the announcement of essentially it's the war on Iran now, I think silver has extra little bit of catalyst ahead of it now. But we're gonna watch the chart and actually make sure that things play out. And when the chart breaks out, then we'll start to take action. So the key level for me is going to be break above $100. And if this was like some sort of like cup, if it created like a cup right here, then we'd start to get this handle and it would start to trade sideways. Let me actually pull up. Oh, look at that. I'm right on the silver chart right now. So let me make a little drawing here. So if the cup went something like this, and then we started to trade sideways in like a channel, something like this, and then break out, that would be extremely bullish. And then we could start to maybe even get back into silver at that time. As of right now, I don't foresee that happening. I actually think $100 is going to be a little bit of resistance. And we're probably going to bounce down below because there's a lot of people who probably bought around $100 and they're going to start to sell once it reaches $100. And that is probably going to put downward pressure on silver. And it's something that we just have to watch out for. So just keep an eye on the chart. And when that changes, we will change as well. Right now, I don't think like I think we need another shakeout. I think we need to hit like $55. People are going to be scared as hell and calling for the end of silver. And that's when we can start to accumulate a longer term position. I think that is a smart way to attack it. Let's go over the S&P 500 because we've been watching the S&P 500 do this slow motion kind of sideways action / decline, right? And we've been calling for this for probably like the last like 4 months now, I guess. We were watching this upward movement. We saw it stall out around $7,000, and now we're starting to roll over. And if we even placed a trend line, something like this would start to make sense, and that would start to create like some sort of wedge. And if we started to break out, then that would maybe be bullish in the short term. But then again, we still have $7,000 as like a ceiling, so it's going to be hard for it to like break up above that $7,000 price point. And I don't think we're going to make that happen this year. But the chart is going to tell us, right? So once we get that breakout, we could maybe start to say, okay, well, that first support line / now a ceiling is going to be a problem. We're going to need to break through that. But if we break through that, then we're probably moving to $7,000. And it's all about these like key support lines that I've laid out. And we've been talking about these for many, many months. But I still think, as of right now, the downside risk is going to be this third support line or that 200-day moving average. If we start to break down lower, I think it's coming down to that 200-day moving average. And that is going to send a lot of the other stocks in the market down with it as well. It's about, let's say this plays out over the next like couple weeks. It could be about a 4.3% decline because that 200-day moving average is going to rise. And then eventually the chart and the candles will actually meet that 200-day moving average. So not a huge amount of downside right here if it plays out over the long term. But if it plays out over the short term, it starts to get really aggressive. Like let's say we get like, a very serious decline like in the matter of the next couple days. That's going to suck a lot of the other stocks down with it. And then, of course, we might see a little bit of a recovery rally because it just happened so fast, right? So that's what I'm thinking. I'm going to trade alongside these second support line, third support lines. We got to be patient for this to play out. And that is the game plan there. So let's hop back over to the article and let's see what the next chart is. So gold's kind of interesting. We are actually still in an uptrend on gold. The problem here is we have what is called a bear flag. So we were looking at a bull flag on HEFT. That's when you go up, trade sideways. The opposite is actually happening on gold. This is going down, now trading sideways and slightly up. That slightly favors the downside, but what could also happen is we break all-time highs. And let's go over to the gold chart here so we can actually see. The all-time high is going to be 5,600 right there. So we break 5,600 in US dollars, and we're back to game on. And I think this kind of is a little bit more likely now because the announcement of the war and things like that. Gold's going to react on Monday, absolutely. But again, will it react enough? Or will it, be a slight fake out or anything like that? Because we've had a massive run on gold. We don't know if like war is currently priced in, right? So that's why I'm thinking be patient. We wait on the chart. And the exact same thing that's going to happen with silver. We're going to see it go to which direction that it's going to go to. And then we start to make those trades based off of that price movement. So very important. We're in a wait and see mode. Although this is like a 50-50 chance that, we go up and break all-time highs or like break down because we have a bull flag, which signals we should go lower. But we also have that announcement of the war, and gold generally will react off of geopolitical risks. But generally the geopolitical risks are a big reaction in like the first couple weeks and then it fizzles out. So like, not super reliable. I don't have a clear read on gold, so I'm not doing anything. But if I didn't have any gold, I would definitely just accumulate at no matter what price, because yeah, over the long term, like gold's gonna go a lot higher. Like I said, I have a $22,000 price point on gold, and that's just based off of the math. So let's go into the stoplight stocks section, because I made a couple changes, but like I think the charts on these stocks are actually getting very interesting. You can see my portfolio update here. I added collectibles into my portfolio. I was trying to find the value of a specific couple items that I've had for a little bit of time here. And once I got those like graded and things like that, we started to add that into my portfolio, and I'm going, holy smokes, like I can't believe that it's worth this much. I definitely should add this into my portfolio. So I know this is very specific for me, but I was also thinking, and one of the things that I'm going to talk about in the webinar is how collectibles are actually a really good asset to hold, because generally they're uncorrelated to the stock market. If the stock market starts to decline, I gave the example in the article here, rookie Wayne Gretzky card that's signed by Wayne Gretzky, like nobody is going to sell that just because the stock market declined. They're only making they're not even making any more of those cards. So like those are the types of investments that you could actually add into your portfolio, and it would actually be fun. Like I was thinking about my dad, who's like he's a diehard Maple Leafs fan, and imagine saying to him, I think 25% of your portfolio would actually make sense to just be allocated to rare collectibles. And that could be totally different for you. But for my dad, I was thinking about telling him, like, it'd be hilarious to just go out and buy like a bunch of Toronto Maple Leaf items that they're just not making any more of. And it would be a much more fun way to actually start to allocate money in a responsible way, and actually maintain some of your purchasing power. I have a video coming out soon. It's going to talk about a watch. Now, these are the types of collectibles that I was talking about. Is I have a number of really nice watches, and some of them have actually appreciated by 29%, which is kind of crazy to think about. Now, after you account for inflation, the gain on it is like zero. But at the same time, think about that. You put money into a collectible like a watch, and it starts to maintain your purchasing power over time. That's kind of cool, right? Like that's the type of collectible that you would want to have in your portfolio. And that's what I've essentially added into my portfolio here. So very interesting, 38%. That's way overweight. I would definitely cut this down to 25% if possible, but I just didn't realize the value of some of the things that I was actually holding that I wasn't including in my portfolio a little while back. So just for your insight there, and I would probably limit this collectible section to 25%. So right now, I have a 17% weighting to stocks right now. I am very defensive, and also holding a lot of cash. That's 13% right there. And SGov is something that I've singled out because it's kind of like a cash position, but you actually are able to generate income off of your SGov position. So that's going to be 10% of my portfolio here. So you could kind of think about like I'm essentially 23% in cash right now, but 10% of that cash is actually generating some income. But just to mention the stocks in my portfolio right now, 17% of my portfolio is dedicated to U.U, which is SRUF, but the Canadian version of that stock, and then URNM. This is, they're both uranium plays, and I think the upside potential is amazing. We'll go over these two trades later in this video here. And those are the only two stocks that I'm currently holding. Now I might start to make adjustments come this week. I'm going to take another look at the cash position because there are a couple opportunities that I'm kind of interested in. One of them is BBU. Let's go over that chart right now. So I sold out of this position right around here, thinking there's going to be some downside risk, and we have seen some volatility for sure. And we've essentially traded sideways since then. So not a big deal to sell out of a position, to, de-risk the portfolio. We could always buy back in. It's not a big deal to buy back in, especially if there's new information that has come up. And the new information that has come up is this rising 200-day moving average. I'm gonna hop over to Trading View here so I can show you a little bit more detail. Basically, where we were trading around this channel, and I was thinking we're going to get another spike up to this resistance zone, but we've traded sideways. I think this is probably going to break, and actually we've seen that happen. This was Friday the 27th, and this is probably going to break. If we close down lower on Monday, this is going to come back and touch this 200-day moving average. And what's really interesting is we have major support. This is this level right here. I should move that down right around here, or even right up top here. We have major support. Now also the 200-day moving average is crossing that major support zone. That's like, there's like 3 levels of support right here, saying that, if we come back and touch this 200-day moving average, that's probably the place to buy and jump back into this stock here. So let's watch the chart here. I'm much more comfortable about opening a position on BBU right now, opposed to when I sold it a little bit ago. So like, imagine if we opened up a position on BBU, the upside here is going to be somewhere, like, let's say we're somewhere around here. The upside here is 12%, but the max downside that I could see is somewhere around 9%. So not great odds, but imagine if BBU starts to tap that 200-day moving average. Let's see, somewhere around here. I would probably adjust the max upside to be 9% here, and then the max downside would be closer to 3%, 4%, somewhere around there. That is some odds that I actually want to take advantage of, because what would essentially happen is, let's say we get like some sort of like chop downward like this. Let's remove my target there. So let's say we get some downside movement. This 200-day moving average is going to come up and go something like this. We get a bounce, and it would probably go something like this. And then we can start to trim those profits off. But now we're back in this channel that we were trading in 2025. Oops, let's go back here. And we have a couple areas of key support, and also this would be perfect for a long buy as well, because we have this 200-day moving average sloping up. Even though we've corrected a significant amount, the uptrend still is intact. So we should start to trade sideways and upward into this channel, and then it'll get super bearish when we start to maybe trade something like this. It might like trade somewhere around here and then start to phase out, break down, and that's where this around here is where we can exit. This is looking further down the road. Of course, we have to watch the chart, monitor. I could be wrong on this, and it could just like break down like right away. Like it could just like collapse like from here to there, and then we'd have to exit somewhere around here. So position management, very key, but BBU looks very, very interesting. This is a part of the Mark Carney stock investment strategy. I wrote about this in 2025. We were able to generate some profits off of this already. Let's look at re-entering into the trade maybe this week. So we'll keep that on the sidelines there. Same thing with BEP.UN. This is another Mark Carney stock that we are watching. And basically we've been trading in this kind of sideways kind of pattern here. Again, we can call this a bear flag because we've broken down here, traded in the sideways, but the bear flag actually was negated and then broke up out of this wedge pattern right here. So we were monitoring this wedge pattern. It actually broke up. I was saying, let's de-risk the portfolio. We'll step aside from BEP. We were up significantly on BEP if you were following me since 2025. we made some profits there, we can start to look at re-entering this trade as well, because again, the uptrend is starting to form. Like, check out this little uptrend in the 200-day moving average. We could start to extend that over a longer term time horizon. And if Mark Carney is going to continue to throw taxpayer dollars at Brookfield stocks, which I think he currently is, and we can actually see that in BBU. If you go into their financial reports, you could see that they are just experiencing some crazy cash infusions, and that's probably because they're receiving government funding. So that's what we talked about in the article. We were speculating that would happen, and we were speculating that we would see the rise in some of the share prices of the Brookfield funds, and that is what's happening. It's kind of crazy to looking back with like hindsight, you're like, oh my gosh, that's so nuts, like that's actually happening. But here we are. So the thing that I was monitoring on Brookfield Renewable Partners, BEP, is this topping tail, and that's what I want to see this break out of. So for example, we saw this on silver. Remember, we were talking about the topping tail on silver, and then we saw just a massive correction. Well, look what's played out right here. This topping tail has sent BEP down much further, and since we've kind of come back around, that's going to mean that there's going to be some resistance right around this point here. So 45.79 is going to be the key level to watch. We break above that, and then we get back to a game on situation. We can start to re-enter those trades. Very excited about that one too. Moo, this stock right here, this is an agricultural agro business ETF. That's what they call this. I didn't put this on my watch list soon enough to catch this up movement here, but what you can see is we have two bull flags. So one forming right here, sideways action, there's the breakup. We have another bull flag right here, sideways action. We're probably going to get another breakout, and that would equate to about a 10% move, 7 to 10% move on this ETF, bringing this up to $90. That would be the next price target for Moo. But again, we just got to wait for that breakout to actually happen. So trade notifications might be coming up on this. Let's go over SRUUF, because this is a trade that we're currently in. All right, I guess I told Substack subscribers this was going to be a long-term kind of play. It's going to take some time to play out, but all the things that we talked about in the initial purchase of this this purchase, yeah, all the things that we talked about when we first got into this stock are still in play. So we have a massive cup formed on the chart here, which is a bullish signal. We're how the cup would play out is we start to break upward and go to this first price target of 25.15. We're going to get some sideways action on that, and then once it breaks out of the channel, then we're probably going to go a lot higher and actually break out of this 25.19 kind of price point there. But we need to see this play out. What's also super interesting about this stock is we have the cup pattern, but also in that cup is a inverse head and shoulders, which is also a very, very bullish a pattern to see on a chart, meaning that we're probably going up from here, right? And this is exactly what you would want to see on a inverse head and shoulder pattern. You see the breakout of the entire head and shoulder, right? We have a retest to where it broke up to, and it's actually kind of holding. It's a little bit low right now. Like we should probably see on Monday, like in order to maintain this head and shoulder pattern, we want to make sure that we're actually breaking upward to the upside here and seeing some buying happening. But if we break down lower, it's still not a huge deal. It would just negate the head and shoulder pattern that we have on the chart, but it would probably come back down and touch this cup pattern right here, and then we'd probably experience another bounce off of that. So no cause for concern, even though we are slightly under the kind of breakout point right here. I'm just watching the chart, letting this play out a little bit. It's going to take a lot of time, but what's the max side? What's the max upside here? Well, first, the head and shoulder pattern, the upside would take us to a target of 28.45, but the cup pattern is also in play here. And if you take the max upside after we get this sideways consolidation and then breakout, the max upside on this is massive. It's 83% from where we are today. So if you haven't gotten into this trade, then there's still lots of time. We're essentially where we bought it at right now, just slightly lower than where we bought it at. And if this fully plays out, like we think, there's 83% upside. That is the max upside target. I would probably start to trim those profits as we start to get higher and higher and reach key levels here. So this would be a key level, 28.53, and then I would start to trim right around here as well. And then of course, max upside, I'd probably be gone by this point in time, but if you were a little bit more risk adverse, then you might want to hold right to the top here. And then at that point, you would definitely want to peel back that position there, because that's going to be a massive move on SRUUF. If you're using Canadian dollars, then the stock that you want to purchase is U.U. And that's what I've purchased. The chart is exactly the same max upside target. We just have a max price of 37.28, and then your first target on that would be 28.38. So a little bit of a difference in price, but only because we're trading in Canadian dollars here. URNM. This is a trade that is in the watch list here. So let's make sure we're going in the right order. Yeah, URNM is the next one that we're going to talk about. What's really interesting is I left these drawings on from when we entered into the trade. This is where we entered into the trade, and this is where the trade notifications came out, right around this area right here. We said that there's some key support right around this area. I wasn't sure if it was going to be this one or this one. We traded right down to the low on this price point right here, 65.68, and then bounced off of it. Now where you can say, okay, support is confirmed. Let's send those trade notifications out, and we started to enter into the position right here. And then I left this projection on the chart here, and look at how perfect this has played out. It's just been ridiculous. Like this is like so accurate. Like it's kind of funny to see. So this trade is in good shape, even though, you know, the last couple days that we've pulled back, we're still trading in this like little channel. I'll give you a close-up zoomed in view on my screen here. We've traded in this channel for a little bit of time, and we are just moving slightly upward. Now, this could be considered a bear flag because we have the downward movement here, sideways chop upward. What we'd want to watch, and this might signal that we need to exit the trade, is if we break down lower here on Monday. With the announcement of the war on Iran, I think this is going to lead to upside, but that's the direction that this chart was headed towards anyways. So no real change because of the Iran war, if not slightly more bullish on uranium and just commodities as a whole. But yeah, we're in this right now. We're going to let it play out. I'm going to start to trim my profit off at about $77 or so. That's a little bit of resistance right around here, but the max upside for somebody who's a little bit more heavy into this position, I don't have a ton of money into this stock, so I'm probably just going to trim the profit right here. But if I had, say, you know, double digits or something, not double digits, sorry, like $10,000 into this play, then I would have a little bit more room to trim that. I don't have that much in this this trade here myself, so I will probably peel my profit off here. But if I did have, like, say, 10,000, even more than 10,000 in this trade, I would look to peel off some of the profits up here, but definitely peel some right here as well. So you can kind of make adjustments based off of what your situation is. Final thoughts, we just revisit the HEFT ETF, so that is where I'm going to leave it. That is the charts, and I hope it helps, and I hope it encourages you to start to take action on some of these trades, especially when you see the accuracy that we've seen over the last year or so. It's been a pretty amazing year. I actually posted my performance on all of my stock accounts. Let's just go back and take a quick peek before we end this video here. And we're doing really, really well. This is my least used account. I think it just has it has a little bit of money in there and a little bit of SGov in this account right here. That's up 1.9%. That's thanks to those dividends. And then this is where I start to get a little bit more active with these accounts right here. The most used account right here, 36% up on the last 6 months, which is unbelievable. That's thanks to only the stocks that we've talked about in Metals and Momentum. So that was like oil. That was NAT last year in 2025. We absolutely crushed it with NAT. That was some of the oil stocks we talked about, where this would deal with this would account for some of the uranium stocks that we're currently in right now. So really amazing performance, and I hope we use the Metals and Momentum to actually start to take action and make some moves. You see the writing on the wall if you read the book, The Fourth Turning. Amazing book. It is incredible, but you can't read that book and go, okay, I can just carry on with your day-to-day life. Let's start to make some changes. Let's start to take some action in our portfolios. And that is what Metals and Momentum is all about. So thank you so much for being a subscriber of Metals and Momentum. Thank you so much for Bill, who sent me a bunch of money in the Buy Me the Coffee app. That's unbelievable. I can't believe Bill did that. Thank you so much, and I'm so glad that Metals and Momentum is helping you out dramatically. So appreciate that. Appreciate you guys for being here, and we will see you in the next one.